Well, good morning, everybody, and welcome to our third edition of Coffee and Grain Markets with Dr. Seungki Lee for 2025. I'd like to welcome you to today's Zoom webinar. Just a few housekeeping items before we begin. If you have any questions as we go along today, don't hesitate to drop those either into the chat or Q&A box. I'll be monitoring both, so we prefer those to be in the Q&A box so we can capture those for later. But if you want to put those in Q&A, we'll reserve the chat for other items. But I'd like to welcome you to our program where we have Dr. Seungki Lee talk about the WASDE reports and reactions to that. This program is sponsored by OSU Extension, the Ohio Soybean Council, the Farm Financial Management and Policy Institute, as well as the Department of Agriculture, Environmental and Development and Economics. So I'd like to welcome you. Seungki, I'll have you turn on your camera, and we won't delay because we're going to just jump right into it. Last Tuesday, the WASDE report was released, always in anticipation for farmers across the United States. This one, though, I would say I was out in Montana on vacation earlier this summer, and I saw a few of these things called bears. I saw a lot of bears and no bulls. Well, you know what? Looks like that's what the WASDE August 12th report brought a little bit of bear action to us. So let's start right there. Well, first, I should say good morning. I'm Seungki. We all from Ohio State were out at the Midwest Outlook meeting together last week, learning more about the markets and forecasts. So it's perfect timing for us to come together this morning to talk about the grain markets. But let's just jump right in there for the August 12th market report. Can you brief us on that WASDE report, that August 12th report? What did it say about the grain market outlook? And we'll just bounce it right to you and get right in here on a beautiful Friday morning here in the state of Ohio.
Yeah, thanks, David. Thanks, everyone, for joining today. As many of you may have already heard this, but this month's August WASDE report was pretty bearish, and the market was hit hard, especially on the corn side. So before I start, a quick spoiler: today's talk is not going to be very positive or optimistic. Let me just jump into the summary table first. So here is the corn and soybean balance table. So I want to start from the total supply of the current market year, which is 2024 market year, because we are almost at the end of 24-25 marketing year. For corn, when you look at the left column side, we had a total supply of 16.6 billion bushels, which is pretty high. On the demand side, when you look at the market year 2024, feed and ethanol both showed very solid demand. If we combine them, it's already about 11 billion bushels. I also want to highlight exports. We are close to the final number, and we can confidently say exports this marketing year was a record high. Not the second highest, but the highest in our history. So actually in our second quarterly coffee and grain talk in my previous talk, I said it's gonna be second highest in our history, but actually USDA updated it. So now it's at about 2.8 billion bushels, and this is certainly the record high in our history. So that's something like we got new, and putting all that together, like ending stocks this marketing year is going to be about 1.3 billion bushels, which I think is not like that high, but reasonable. So if you look at our beginning stocks for the 2024, they were 1.7 billion bushels. So compared to this marketing year, next year's beginning stock will be less, thanks to the demand progress. So the season average price for this marketing year will be $4.30, which is 5 cents down from the previous report. So that's where we are in corn. We had a big supply, but we digested it pretty well. So the balance was okay. So I think that's the current situation. But now, moving on to the 25 marketing year column, the shocking information is highlighted by the red box. So as you can see, USDA reported corn acreage at about like 97.3 million acres, and national yield at 188.8 bushels per acre, so almost close to like 189. New crop production will be 16.7 billion bushels, almost 2 billion bushels bigger than last year. I mean, last year was not that bad, but even compared to that, 2 billion bushels more. The total supply, when you combine everything, like will be above 18 billion bushels. Obviously, a record high in our history, and this is going to be the most bearish factor in the current market situation. So if that's the case, the market will likely struggle for a long time to consume and digest and eventually to try to find a balance. So until that point, it's pretty obvious we are going to have excess supply for the next couple of months, or like maybe even more than a year. So that's kind of the biggest concern these days in the market. USDA like both technically and based on supply demand mechanisms tend to correlate demand with supply. Uh, so like when supply is high, USDA tends to increase demand possibilities in many sectors, which might happen because the corn price will anyway be lower next market year and in this situation. But there's also a physical capacity limit on the domestic consumption. So I'm not sure like whether we can achieve all these demand numbers like as you can see in the May side, but like those are all like very strong like domestic demand prospects. So that's what USDA says at this point, which might be like maybe part of that is attributable to the strong supply, and part of that is just because of some of the rosy view of the demand by the USDA, but. I want to highlight here like the export again. Like given the domestic capacity constraint at some point, uh, the one thing that could increase quickly at the demand side will be the exports. But we already have the record high export this marketing year, and USDA says exports will be bigger next year, which is to me it's a little bit questionable. So that's one of the biggest question mark in this table that I have. And even with that strong like demand penciled in, like because we have very large corn supply next marketing year, like ending stocks will be around like 2.1 billion bushels, and the season average price will be $3.90 per bushel. The interesting point here is the previous WASDE report, USDA expected the season average corn price at $4.20. So just this month, USDA cut 30 cents from the projection. Um, why did USDA move so much? Like a lot of information arrived actually in August. They updated production numbers using like FSA acreage from the crop insurance data. Farmer survey estimates also incorporated in this calculation, and also like satellite imagery, weather conditions, crop conditions. Those kind of things are like combined with like other like prior data that they had. So they pulled it together and made their best estimates. Process-wise, that's fair, but we are still like in a bit of fog as to whether these are truly close to the final numbers. That's the kind of my frank assessment of these numbers. For soybeans, total supply was 4.7 billion bushels in this marketing year, which was slightly big but not big. Thanks to very strong domestic demand, especially the crush and exports of 1.8 billion bushels. Both did pretty well. The total use was 4.4, and ending stocks were 330 million bushels. So the season average price is now expected to be $10. It used to be like below 10, so it ticked up. So soybeans are kind of like finding balance and recovering their fundamentals these days. And when you move on to the next marketing year, soybean side, the new crop on the supply, USDA says soybean acreage will be 80.9 million acres. Total supply will be about 4.6 billion bushels. Crush is still expected to go up given ongoing construction of new crushing facilities and renewable diesel support. which is actually very, very, I think, uh, uh, kind of bullish factor, at least in the soybean market fundamentals for I think for the past couple of years, and I believe for the next couple of years too. Even though USDA takes exports down by about 170 million bushels to like 1.7 billion total demand, sorry, USDA cut exports down by about 170 million bushels compared to the previous market year, and like penciled like 1.7 billion bushel as the export prediction. Um, but like total demand is going to be 4.3 billion bushels, and like, altogether ending stock will be slightly down. So basically, like less supply, less demand, but supply cut was bigger in this case. So ending stocks are expected to be 290 million bushels, which is like slightly down from this marketing year. So you see the kind of the stock level like is predicted to be lowered in the soybean side, and the season average price is estimated at $10.10 per bushel. So that's so it looks like kind of soybean is like staying robust and at least like it's solid at this point, but corn is like kind of getting in trouble with this huge supply number at this moment. So that's kind of my quick summary of what's happening in the corn and soybean side in USDA August WASDE report.
Yes, Seungki, I would say big shifts in those acreage, of course, between the two players there, plus the record yields that are bouncing through there, but still time in the month of August here as we fill out those crops to see what actually is there. So so as we looked at this came out the 12th. I think it's only been over a week since that happened. What happened to the markets? I'm sure that you probably have some market reaction that you probably want to share because this little bumpy ride here like the past week.
Yeah, there has been a bit change. First, like a quick analysis, like the let me show this. Like the average farm price tends to like correlate negatively with the stocks use ratio, like based on the historical analysis. So looking across roughly like last 15 years of WASI numbers, as you can see, the dots are just the annual observations, and the red dot is 2024 marketing year, and the blue dot is 2025 prediction. As the stocks use ratio goes up, price fundamentals weaken, and for corn, the 10% level is often treated as a threshold for stronger like market fundamentals. If stocks use ratio goes like above 10%, we usually say the corn fundamentals tend to be fairly weak. And from this new WASDE, we can read that fundamentals are likely to be quite weaker next marketing year. As you can see, that's a huge shift in terms of the stocks use ratio. And for soybeans, the threshold isn't as clear as corn, but like based on this, like I would say 7.5% is a reasonable like bullish bearish threshold in terms of the stocks use ratio. In 2024, like we were pretty close to the threshold, and in 2025, we are likely to see a little more like bullish strength in fundamentals. The season average price reflects that positioning as well. So that's kind of the quick like fundamental change in terms of the data. And when you actually look at the market, here is the future market reaction. In the corn side, when WASDE was released, as you can see, there was a sharp drop, more than 10 cents within a day. But this decline actually, when you look at this like kind of whole picture, but this declining pattern started on August 1st when FSA acreage data was released. The market already expected a big change in fundamentals based on the crop insurance data. So that's kind of something we can also read from this chart. And when you look at the soybean side, it was the opposite a little bit. So as USDA reported, new crop soybean acreage lower than the market's expectation, fundamentals improved, and there was about like a 30 cents increase in soybean futures within that day. I also like wanna point out uh, the crop projections. Sorry, crop price projections based on the futures price. So basically, what I did in this picture is I aggregated all the 2025-26 futures contracts for corn and soybeans and looked at the pattern over the last couple of months. So when the curve goes up, the market perceives stronger value and fundamentals for that commodity. Basically, that's how to use this chart. So when it goes down, fundamentals are weaker. So for corn, for instance, like valuation and fundamentals have been declining continuously since April or August. Averaging across the contracts, it's just above $4.10 now. For soybeans, there has been some volatility, and we are seeing a recent uptick in futures uh, implied fundamentals. Long story short, like very bearish and even maybe depressing, like corn and solid soybean markets. That's kind of, I think, a quick summary of like market reaction and fundamental change like these days, like based on the WASDE's information.
So we all like to second guess in key, so we're always like it's just in our nature to question numbers. So maybe we should say how much faith do you have in the current estimations that were put out here a week ago? Any chance we see a change? And that could be positively or negatively. What's your thoughts on that? And this is not to second guess anything that we see on these reports, but really, what do you see as far as your faith in these numbers going forward for the next marketing year?
Yeah, this
Not,
is
not, not to put you on the spot there, Sinki, but we'll put you there on the spot. So,
yeah, this is pretty, I think, very subjective assessment. So it's not very scientific, but like I have to say like there's a good chance like we will see updates next month. I'm pretty sure there will be some changes in acreages, especially because next month report will incorporate USDA's objective field surveys with more rigorous analysis and sampling. So I think I kind of feel like, and also sometimes like hear like some of the discrepancies and like kind of disagreement with USDA's numbers. So probably at this point, what we can do is maybe agree to disagree. That's kind of the best way how to accept this information. But I believe there might be like some like I think adjustment in the USDA's numbers. So on the broader like question of confidence, I also have questions on several numbers, but at the same time, like my underlying attitude to these numbers is we should accept them as the key parameters defining the current market conditions because that's what other market players are trading based on. So like ignoring that won't help our marketing plans. But I would emphasize just like being open to the possibility of yield and acreage adjustments maybe in the next month or so. So that's kind of quick like view of mine. And like for context, like here's the acreage change in corn from June to August. So from June acreage, we got the August, like after June acreage, we got the August update based on FSA and like farmer survey estimates, weighted across like different sources. And like many states, including Ohio, showed like significant increases. Like Ohio is estimated like about 200,000 acres more in corn compared to June. That's a sizable shift. And we will see like what comes in um, September, like which should be more credible. Um, there's also discrepancy, quite a bit of discrepancy between industry and USDA. Before the report, industry thought that the corn production would average around 16 billion bushels, but USDA reported almost 16.7 to 8 billion bushels. That's obviously shocked the market. For soybeans, the opposite. So that's why actually soybean futures market reacted pretty positively to this report. Many expected around 4.38 billion bushels, while USDA said below 4.3 billion. So sometimes like finer numbers move toward the industry view, sometimes USDA views win out. Uh, we will see. We will see like in the next couple of months. But at this point, I think given this like huge difference, we will see some of the adjustment very likely down the road. And maybe I think, yeah, I think that's kind of my frank assessment of these numbers.
So that's you're mentioning on the yield side. Now you mentioned there's some strong numbers as far as even in this marketing year we've had, and despite the world global stage that we're in right now, there still was really strong, has been strong demand, more than probably what people, that on the peripheral would even know. But there has been strong demand. So what about on the demand side of that report? Do you see changes coming on that, or how does that look for you as far as demand? Because
Yeah,
there's two sides of the equation there.
true. Yeah, as mentioned before, like I think domestic demand is solid. That's kind of my view, and I think what USDA said as well. So for both corn and soybeans, and I expect they will be stable and strong in the next marketing year. So I'm gonna focus on exports, which is kind of the most like I think questionable part. But probably so far this is kind of a beautiful chart of corn export that we had this marketing year. So this year's corn export progress, when you look at the left graph, this is kind of exceptional like progress. The red line is basically like through the roof, and when you're just digging into the data, like it helps why. It helps explain why. So looking at the top six corn like U.S. corn buyers in the right figure, Mexico is the number one, Japan is number two, and Colombia is number two, number three, South Korea is number four, and EU was number five, and Taiwan is number six. And especially when you look at the South Korea, it like actually increased. So this gray bar is indicating how much corn purchase increased compared to like previous year. So basically, South Korea increased 160% more like U.S. corn purchase in this marketing year compared to the previous marketing year. EU, it is not a typo. It is like 530% increase compared to the previous marketing year. So especially I think I want to highlight this EU's like very strong demand like for this marketing year, like largely because of Ukraine supply situation and the kind of supply issue in the Ukraine and Black Sea region. So many European countries like buyers needed alternatives, and US was a primary source this marketing year. That's the key reason for this year's export success, I would say. It also means we need to watch the Black Sea region very closely. If Ukraine corn supply recovers, some of this export potential could disappear next market year. So uh, we have to be like monitoring this very closely. When you look at the soybean side, exports were not very strong, but like close to our 5-year average. So I think this is kind of becoming a new normal, especially the weak export in the second half of the marketing year because of Brazilian competition, kind of which keeps getting tougher. Uh, and looking at the top buyers, China reduced purchases by about 8% compared to the previous marketing year. And I just want to note that like almost 8 to 10% down every year, like by China, has been just a consistent pattern since 2021. So because China tries to diversify away from US soybeans. And they still like buy a lot, so they remain our top buyer from our perspective. But from China's perspective, the US share from their import is now like about just 25% of their total soybean imports. So I'm a little bit pessimistic on like our market share in China for the next couple of years due to China's strategic reduction in US soybean purchase. The EU shows up again. I hope we can keep the EU market continuously to strengthen and diversify our export channels. Mexico also stands out, like number one corn buyer and now number three soybean buyer. So I'm quite like concerned about retaliatory tariff risks, but I hope these like don't materially affect like Mexico's purchasing trend. Egypt is also appears as the notable like U.S. soybean buyer this marketing year because of like upswing in their feed consumption, and also the exchange rate actually like U.S. dollar like has been weakened during the past couple of months, and that actually helped our export performance here. So that's kind of where we are. And maybe to talk about the next marketing year, the globally for like 2025-26 marketing year, we are expecting about like 62.6 million metric tons increase in corn production. Not enormous, but just notable, I would say. And the challenge is the US produces about two-thirds, about 70% of that increase, which is a problem domestically. So foreign markets may be just normal, but we will need to figure out how to digest this massive US new crop corn supply next marketing year. On the soybean side, the global picture is pretty stable. Brazil is expected to plant more soybeans, especially if they see a lot of US corn coming. We expect about like 6 million metric ton increase in Brazil soybean production, a record high again. So export competition will remain tough, but we will find a way as we did in this marketing year. One more picture I want to share is the global trends of stocks to use ratio. Globally for corn, the stocks to use ratio is expected to go down, while the US it is expected to go up. That divergence is very, very unusual. We haven't seen this kind of pattern, at least in the past 2 decades. Usually they just move together. It implies we might need drastic adjustment to resolve market imbalance, huge exports, major supply problems elsewhere, those kind of things. So regardless of tariffs or trade policy uncertainty, just pure fundamentals suggest the US will be dealing with an abnormally heavy corn balance next marketing year, given this USDA numbers. We don't know like whether the USDA will cut down the supply number in the next WASDE report, but at least given these numbers, we will be really in an abnormal market condition in the next marketing year. And that's why it's important to think about risk management tools now. And on the other hand, like for soybeans, both globally and domestically, the stocks usage is expected to slightly decline, which kind of modestly support soybean fundamentals next marketing year. So soybean is relatively in a pretty like normal market condition, I would say.
So, obvious, we have a lot of Ohio producers on today. So, what's some key takeaways that you would have for them, Seungki, if we had to wrap it up into tie a bow on it for us here in Ohio?
Yeah, it's gonna be it's gonna be very volatile and depressing market. So it may feel like there aren't many good selling opportunities, especially in corn. So I want to say, try to think carefully and move as early as possible if you can. In grain marketing, we usually say that after like harvest, already 80, sorry, already maybe about 70% of the best sales opportunities are like behind you. So given the very challenging corn situation, if you already have like hedge to arrive or hedging or other forward contract in place, uh, you've given yourself like good protection. If not, my like kind of 2 cents like suggestions are like maybe check the storage options and check whether they pencil out or consider other like pricing contracts such as maybe deferred price contracts or also think about like store and sell later strategies with a clear plan. So those kind of I think a little more like risk managing plans and think very conservatively about the market conditions for the next couple of months. So that's one thing. And I have some additional slides about the futures market, but when you look at the futures market, there is a very strong market spread. So the four futures curve shows very strong carry, which means market is really disincentivizing farmers to supply grain for the next couple of months. But even the corn will be treated pretty well at the end of this marketing year. I mean, at the end of 2025-26 marketing year. So probably storage value will be pretty high for this marketing year. So it's actually good to check whether there's any off-farm storage options that farmers can access and find. And that's gonna actually help and later like get their grain like sales to be treated pretty well in the next like at least at the end of the next marketing year. So that's kind of my 2 cents at this point.
And kind of we can think that as we look ahead, September 12th is the next report. So September 12th, the week before we go to Farm Science Review. So Seungki, you'll be at the Farm Science Review. I know I saw your name on the Ask the Expert stage, as well as the department is holding their their talk from the department, and you're part of that panel. So you'll be out at Farm Science View for people to kind of process the September report with you. Then we'll come back not till November. So we're gonna our last quarterly WASDE update with you for coffee and grain markets will be in November on November 14th. However, a lot of time between now and then for things to be moving. Maybe we get into the next month and see that maybe we're overstated on yield, especially in those fringe. I call us the fringe, the states that surround the I states. That's where there was a lot of new acreage that showed up in the report. So maybe we're watching that weather as we complete the crop here. We're looking at demand, lots of things going on with Ukraine and Russia, and of course with China and trade. Definitely, these are the times where a producer needs to stay connected to the reports and to the different things that are happening globally to think about how they put their risk management plan in place. That's how I would think it. And we pray for more bulls and less bears, but we are where we are right now. So appreciate you. I know there were a lot of bears in that Midwest Outlook meeting last week when it came to discussing some of the federal policies, taxes, trade, markets. A lot of economists are a little grumpy right now. So just as our farmers are grumpy, our economists are grumpy as well. So Seungki, I'm looking here. I'm going to drop your email into the chat for everybody, as well as I also dropped the WASDE reports where you can check that out. That's in the chat. We'll let people know that we have on the farmoffice.osu.edu website, we have a special webpage just for these updates that Seungki does. So Seungki will send me his slides here, and I will post those for you, as well as the recording. If you want to share that with other farmers in your area or other commodity board members, or share that, or go back and even rewatch lots of good information in those slides, Seungki. We so appreciate you being on today. I'm going to look one last chance. Okay, there's no Q&A. So with that, we are at the top of the hour. So Seungki, we appreciate you being on to look at the WASDE report and to share us your perspective. And I know we'll be seeing you out and about across the state doing programs. So thank you very much for being on today.
Thank you very much.
And we appreciate everybody being on, and thank you, and have a great weekend.
Thanks,